Fibonacci downtrend retracement convergences. Again, we see price swings inside of price swings. We see one large down price swing, but we also see multiple smaller price swings in the downtrend, smaller price swings in the retracement, moving up, and then smaller price swings again in the following down move. What this would look like is this: is if we take the highest high of the big swing and the most recent established low, and we pull our Fibonacci's from the highest high to the lowest low and establish our retracement levels. As well, we pull our Fibonacci's from the most recent high to the most recent low, and our Fibonacci retracement levels will spread. On the big swing, from the highest high to the most recent low and retracement, it retraces 38%, then continues down. On the most recent high to the most recent low, price retraces 38, 50, 62%, which converges with the 38% retracement, and price continues down. What these convergences do is they just simply offer an additional component or an additional support resistance level that is effectively building a stronger wall to the market. And of course, we would like to even see these retracement levels, these convergence levels, also converge with support and resistance trend lines and pivots and our other factors as well. But it's simply offering a stronger level of resistance and a higher probability that the market will bounce at this level. First, we have this up leg. Price rallies, retraces 38% and 10-day moving average. It rallies quite nicely on this 4-hour chart, Euro 4-hour chart. It actually rallies over 100 pips, consolidates, then moves up to 127% extension. That's the upswing. But we're looking at the downswings. From the highest high to the most recent low and retracement, we have a 38% retracement. From this, the most recent high, to the most recent low and retracement is 62%. Okay, 38, 50, 62. Converges with 38% retracement. Is also in alignment with these highs right here. It is also a 10-day moving average, and then price falls from this point. This is an interesting one that's going to raise some questions. It's a Euro 4-hour chart, so it's a longer time frame. And we take this high right here rather than the highest high. And I did that on my own discretion. You see here we have several swings in here on the way down. Some real nice consistent swings as price falls. Sometimes what I like to do is, in this case, it's not much of an exception. You could take either high. I really prefer the higher high, but in this case I took this high because it kind of worked. But also I also see sort of some of the other rhythms here with the 79 and the 50 and the 38, and that's another reason why I like that high. But from this high down to this low, price retraces 38%. See, if we moved it any higher, it wouldn't reach the 38%. But also this 38% is in alignment with these lows, and price retraces here. But from the most recent high to the lows and retracement, we have a 79% converging with a 38%. We also have a 10-day moving average, this green line here, and then we also have a trend line from the highest high. So we have effectively 3 to 4. I use 3/4 because of this one here is somewhat discretionary. So we have a 4 times convergence in this area. We see a real nice bounce. We move below these highs, which is important. Trade below these highs, and then we start our next leg down to 127 and 162% extension. Here's a British pound 4-hour chart, and as you can see, we commonly see these types of characteristics on the higher time frames, which lend to some potentially very big moves. Of course, we would refine our trade on the smaller time frames, but I just wanted to show you how important it is for you to be pulling these tools on your larger time frames to have a real good feel of what's happening. From this high to this low, price retraces 62%. And from this high, this spike high, which initiated a very generous move, to this low, and retracement is 79%, which is also in alignment with these highs here. It moves above the 10-day moving average, and it holds consolidation above, but once it starts to move below, then that is favorable for the trade. And we see a real nice 200 to 300, 400 pip move here. Here's a Swiss franc 4-hour chart. Another 4-hour chart. Please make note of it. From this high to this low, price retraces 38%. Okay. From this swing high to the swing low, price retraces 62%, converging with 38%, and price falls very rapidly to 162%.